Breaking news. Berkshire Hathaway stock just hit an all-time high. Warren Buffett, obviously, for years now, people have been wondering. He hadn't outperformed the S&P 500. Had he lost his touch? Charlie Munger, they do their annual live stream conversation, their press conference from Omaha. What is going on with Berkshire Hathaway? Well, they just hit an all-time high. Do we think that Warren Buffett still is as good as he's ever been? Or just because they hit an all-time high doesn't necessarily mean that they still have their touch, like they didn't miss out on the technology industry?
Yeah, some of this stuff takes years to play out, right? Investments he's making today or yesterday or tomorrow aren't necessarily going to reflect in their share price within the next month, 2 months, 6 months, 2 years even, right? So I think when you think about it in that context, a lot of the investments that he has already made have been playing out and have played out. He's an incredible investor. He's done a great job. He understands compounding and the power of that better than anyone probably. So I think when you look at his portfolio, absolutely, he's done a great job. I think the complaint that a lot of people have against him is like, how does it look when he moves right from a new generation? There's obviously been a digital transformation. He has probably missed out on more of this of the tech stocks than he made. Right? He's obviously invested in some of the companies, but he's missed out on a lot also. I think part of that is him just understanding what he's good at and investing in those businesses. He likes certain things that are value investment theses, right? And he has invested in those for a long period of time. But I think he gets a bad rap within the crypto community specifically, right? Because he has not only missed that boat relative to kind of where we are today, but he has had a very bad attitude towards a lot of it. And he's been very outspoken about some of these things. So ultimately, I think people are just saying, hey, look, you understand one thing really, really, really well, but you don't understand this other thing at all, really. So sure, maybe I'll take advice from you on that thing, but I certainly won't take I won't take advice from you on this new stuff.
Over the last 5 years, Berkshire Hathaway is up 96.7%. This is their Class A shares, so 96.7%. The S&P 500 over the last 5 years is up 105.2%. Yeah. So even over the last 5 years, although Berkshire Hathaway has hit a all-time high today, they haven't outperformed the S&P 500 over the last 5 years.
You would have made more money in the S&P and you would have saved money not buying flights to Omaha to go worship him.
But I mean, again, it goes to show that it's very, very hard to do this. Now, I would actually argue, even though they actually didn't keep up perfectly with the S&P 500 and they definitely didn't beat it, deploying that much money is incredibly difficult. So they have $245 billion of revenue every year. Based on 2020 numbers, they employ over 360,000 people across their companies. And so it's hard when you have a balance sheet. I think they have over $100 billion of cash on their balance sheet. Right? Just that alone is going to drag performance. If you've got all that capital sitting there, it's eating away at the purchasing power. At some point, you got to do something. But I do think that it's interesting. He still hasn't outperformed the S&P 500 over the last 5 years, but the stock hits an all-time high. Now, the S&P 500 hit an all-time high 70 times last year, right? So there is something to kind of pay attention to there. But when you start to look at this stuff, the other thing that I think people forget as part of the analysis is he isn't necessarily trying to optimize for beating the S&P 500. What he's optimizing for is how does he deploy this to continue to drive cash flow, right? And that's where I think it becomes pretty interesting. So the market cap of the Class B shares is $700 billion, and that's also about 96%. So Class A, Class B shares of Berkshire both about 96%, whereas the S&P 500 is up 105% over the last 5 years or so. John, what do you think?
I think the worst investments that they are making aren't showing up on their balance sheet in the sense of missed opportunities since technology has boomed so much in the last 20 years. I think he's a very good investor and a very long-term thinker that spans across generational investments, right? So he's investing in stuff that I think will have and hold value in 10 to 15 years as well as in 5 years, right? And a lot of people looking for very short-term high returns, and he's, I think, making safer bets in a longer time horizon.
Yeah, someone in the chat, Reddizer, made a good point, which is that it discounts the dividends too. That the total return for the S&P would be much higher if you counted all of that in there also in the compounding and all that stuff.
I'm just comparing like for like, just the stock price, not including dividends for anybody, anything, just like for like. But the other thing I was going to say very quickly though is part of this kind of all-time high for Berkshire Hathaway. Again, overgeneralization, but a lot of investors right now are saying, okay, I was in risk-on assets. Those risk-on assets are going to become kind of in the crosshairs because interest rates potentially are going to get raised here. If they get raised, people are going to know that the risk assets sell off. So before that happens, what I'm going to do is I'm going to sell my risk assets, my tech stocks, my growth stocks, my crypto, etc., and I'm going to move my money from the risk assets into more value type investing. And guess what? Berkshire Hathaway is like the meme lord of all value investing. And so it doesn't surprise me that Berkshire Hathaway hits an all-time high at the exact moment that in an overgeneralized way, people are rotating out of the growth stocks and the risk assets into more value type investments. In hindsight, yeah, that makes a ton of sense as to why people would be doing that, is they're seeking kind of safety in something like a Berkshire versus holding onto the tech stocks that have done really well, obviously, over the last 12, 24 months, whatever.